Coaching friends, 702-670-0518 to get pre-approved for a home loan. Whether you're looking to purchase your dream home, second home, or refinance to pull cash out, the coach can do it all. And the coaching is free. Again, that number is 702-670-0518. Yeah, the home loan coaching friends.
Good morning, everyone. Good morning, everyone. My name is Tim Haskins, the Home Loan Coach, and I want to thank you for tuning in to the Home Loan Coaching Friends every Sunday morning at 7 a.m. right here on 91.5 KUNV. Here on this show, we want to coach you in all of your home ownership needs, home loan needs. If you want to purchase, if you want to refinance, if you're an investor, we're here to help you out. And the name of the show is the Home Loan Coach and Friends. We have a friend of the show here today that ties in greatly with the home buying process, especially if you have rental property or if you're self-employed. We have our special friend of the show, Erica Rutherford, here today. Erica, introduce yourself to the people and let them know your business and what you do.
Hi, Tim. Thank you so much for having me. My name is Erica Rutherford. I'm with REEF Tax Group. We do bookkeeping, business taxes, and individual tax preparation.
Awesome. Again, what's the name of the company?
REEF Tax Group.
Okay, great. So all you business owners out there, if you need bookkeeping, Erica can help you out with bookkeeping. Do you do payroll services as well?
No payroll. But I got
okay.
someone that can help you. I got a great referral for you.
Okay, great. So all of your small business accounting and tax needs, Erica is the person to talk to. So I want to pick up on last week's show. I took a deep dive into the process of home buying. We talked about credit. We talked about income. We talked about the assets. Assets are the money you need for down payment and closing costs. We talked about the coffee and conversations that we were at. Erica was there as well. So we learned that a lot of people in the community, in the general public, didn't understand the home buying process. I am a loan officer, and a lot of people are intimidated by giving out their Social Security number, their personal information. And I'm here to tell you that the only way you're going to get a home loan, the only way someone can tell you if you're qualified to get a home loan is for you to give up that information. I want to share that all loan officers after the mortgage meltdown had to be licensed through the federal government and the state that they work in. They had to get credit reports to make sure that they were financially responsible. They have to get background checked. If you have ever had a felony, there's limitations to you getting a license. You may not can get a license if you had a felony. If you've had any convictions that have to do with financial crimes, moral turpitude, you can never get a license. So the government took it in their hands to really check out people who are doing loans now. So you can go to NMLS, that's N as in Nancy, M as in Mary, L as in Larry, S as in Sam, NMLS.com. You can ask the mortgage professional that you're working with, what is your NMLS number? It's a unique identifier. It's only one per person. You can plug that in and see if they have an active license. It tells you what company they work for. So you can check them out. So there's no need to be intimidated by that. So since we have our great guest in studio today, that is a tax preparer, we're going to talk a little bit more about the income piece if you're self-employed or if you are an investor and you have rental property. We're going to talk about that as well. So, Erica, it's, getting close to tax season. We're nearing the end of the year. So I'm happy to have you here on the show. Tell the people your contact information if they need more information on how to file their taxes.
You can go to reeftaxgroup.com or you can call our local number at 702-744-7074.
Great. So in my almost 20 years of experience, I've reviewed many tax returns. And the biggest thing I see is, hey, I want to buy a house. I made $250,000. And first thing I'm doing is I'm looking at deductions and figuring out, okay, what's the bottom line? How much did you write off? And, because we go by the net. Now, there are certain categories that we can add back in, like depreciation. So, Erica, if someone comes to you and they're getting their taxes filed and they're looking to buy a house, is that a question you ask them?
I do, and I get a lot of referrals from agents because I do quite a few real estate agents' tax returns as well as clients. And they usually let me know, well, their client is looking to purchase a home, and we try to reflect their income accurately on the return.
Got it.
To make sure that they are getting the necessary deductions that they need, but not taking any deductions that may not necessarily apply to them, that may be in that gray area, because everybody wants to pay a lower tax bill at the end of the day.
Everybody does.
Yes, that's usually the goal. But when you are buying a house, it is very important that you accurately reflect your income.
Got it. So let's dive into that a little bit. So you want to borrow $500,000 to purchase a house, and you put down on your 1040, your federal tax return, that you made $250,000. Great. You did. Okay. And then you write off all of it, and your net income comes down to $20,000. Okay. Let's just call it $24,000 for round numbers. Okay. Mm-hmm. All right. So that's $2,000 a month. So myself as the loan officer has to look at that tax return and say, okay, yes, your gross says $250,000, but your net is $2,000 a month, and you tell me you want to purchase a $400,000 home, which the mortgage payment itself is $2,000 or more, depending on credit or whatever it is. So, how can we qualify you for a $400,000 home if you are putting on your federal tax return that you made $24,000 after your expenses? I hope this is making sense to you, and I hope that you understand that you have to go to the proper professional. We don't want to talk about other tax preparers, but as Erica said, you have to accurately report your income, especially if you're looking to buy a home. So, Erica, are there any other tips out there? What do you want to tell the people when it comes to tax returns?
I want to tell them, when you're looking to purchase a home, or if you're a business owner, it is not a good idea to do your own tax return. I would definitely, that would be my first recommendation. Intuit, TurboTax, all these online. It's easy, it's a little time consuming. It's easy, probably a little less money. But if you are looking to be in business or buy a home, more importantly, you do not want to do your own tax return. Go to a professional that can accurately report your income, who knows what someone as yourself is looking for, what documents need to be completed in order within the home buying process.
Awesome. Okay. I don't want to step in the lane of the tax professional. That's why we have friends of the show. I'm not a tax preparer.
Right. And I'm not a loan officer. So when they say they're buying a home, I say, well, who is your loan officer? We chat all the time about clients and questions. When I have questions about the loan process, I come to you, Tim, and vice versa. So
that's correct.
I stay in my lane.
Got it. So I know that depreciation is a powerful tool used to add back income and also help you lower your tax liability. I understand it to be in certain businesses where you have equipment, or if if you own rental property, you can use depreciation. So, Erica, talk a little bit about depreciation.
So depreciation is a deduction that the government, the IRS, that's in the tax code that allows you, if you have residential rental property as an investor, you can depreciate the residential rental property over 27 and a half years. If it's commercial, I think it's 37 or 39 years. But it gives you a deduction every year. It's a straight line depreciation, and as long as you own that property, you will get a deduction for the depreciation. And for cars, it applies to, just as you said, not only real estate, but also tools, machinery, desk, computers. Depreciation applies to a lot of personal property, which referred to in tax code, that you can depreciate over time and get a tax deduction.
Great. So let's break that down a little bit. Okay. So I'm looking at your federal tax return, and I'm looking at the top number. The gross receipts came in, $250,000. That's the number we're working with. And you have equipment, you have cars, you have any type of machinery, desks, computers, whatever it may be. And Erica is able to depreciate that. Let's just say the number is $25,000. Okay. So I'm going to look at all your expenses and deduct from that 250, because you have to operate your business. There's expenses. So we deduct those expenses, and say we deduct the expenses down to $75,000. You had to pay payroll. You had you had to pay rent for your business. Any expenses you have. Okay, so it's down to $75,000, and you have that line item depreciation is $25,000. Guess what? As a loan officer, I get to add that $25,000 back to your income, and you just went from $75,000 to $100,000. It is a great line item. It's what we call a paper loss. It's not a real loss. So people ask, well, why can't you add back my cell phone costs or my rent? Well, guess what? You paid the cell phone. You paid the rent. It's not a paper loss. The tax codes are set up to help business owners, investors. They're set up to help those. So they allow certain things, but you got to go to the right professional. That's why we have Erica here that can help you out to file your taxes, to make sure that you get the best with tax breaks that are available to you, but also put you in a position to purchase a home. Because guess what? We just talked about depreciation. So if you are looking for more tax breaks, legitimate tax breaks, and want to make more money, rental property is a great way to go. Great way to go. You can depreciate that property, as Erica said, and we can use those tax breaks to help you with your tax liability, but it also increases income. One of the biggest questions is, I get all the time is, how can I qualify for more house? Well, you can get a second job. That takes 2 years. You have to work a second job for 2 years for us to count the income. You can't go out and get a job working for 6 months and say, hey, I want to use that income. You have to work it for at least 2 years for us to use that income. But if you go out and purchase a rental property and you're cash flowing that property $1,000 a month, guess what? We get to use that money to help you qualify for your next purchase. If Erica depreciates that property for you and you have losses on that rental property, you'll talk to Erica about that. I don't, know all the losses that you can take on a rental property, but you have losses there. We get to add depreciation back in. So it's a powerful, powerful way to make lots of money and still limit your tax liability. Erica, you want to expound on the Schedule E, rental property? I think that it can be on other schedules as well, but talk a little bit about that and educate the people.
Yeah, Schedule E is, you're right, where we report rental property income. It also reports royalties and some other things, but mostly rental property income. You put how much you are making monthly there. You can take deductions for repairs to property. Depending on what the improvement or repair is, it will either add to your basis in the property. So whenever you purchase a property, you start off with a basis. The basis usually includes the price you paid for it. As you own it and you move through the years and you have to do repairs or maybe do some improvements, such as a new roof, maybe you need a new HVAC system, those will increase your basis in the property. But there are repairs that you can take as deductions every year. It just depends. The IRS does differentiate between what is an capital improvement and what is a repair. But your HOA fees are usually taken as a deduction if you have to pay HOA fees. If you still pay the water bill for your client, or if there's any utilities you may have to pay while the property is empty, or you're moving from tenant to tenant, or waiting for a new tenant to move in or one to move out, those things are all deductible, which is great for investment property, because guess what? On your personal residence, you can't take any of those things.
That's true.
You know, the house that you live in, you buy the house and, you know, you have a basis in that as well when you sell your personal property, but you don't get to take any of those deductions for the home you live in. So it's a great deduction and tax law for rental properties.
Awesome. I want to pause a minute and point out that you have to have the right professionals working for you. It matters who you work with. You just can't go to any tax preparer. Erica just said a mouthful there, and I want to expound on it a little bit from the standpoint of a loan officer. She said that there's capital improvements that you can make, and all these things are tax deductible. So you ask the question, well, hey, if I got all these deductions on this rental property, isn't that showing negative? Yeah, it in most instances, you know, you may go negative on your rental property. But guess what? From a lending standpoint, if you replace the roof, if you replace the HVAC system, and you have large deductions that on that rental property, because, you know, let's just face it, most investors, they buy properties, they put work into it to fix it up, to make to increase the value, and then, you know, they rent it out and cash flow it. But guess what? From a lending standpoint, I'm going to say, hey, do you have the receipt for that roof?
Wow.
Do you have the receipt for that HVAC? Well, how many people replace their air conditioning and heating system every year? Doesn't happen. I mean, how many people replace a roof every year? Well, from a lending standpoint, we look at that common sense underwriting, and we say, hey, look, this is a one-time expense. So it may be an expense that you pay. And as Erica said, you can't take that deduction on your personal residence. That's why it's powerful to own rental property, because you can cash flow, you make money. And once you fix it up, you get equity in it. But it can help you reduce your tax liability. And then we get to add that back in. We don't count that as a loss if it's a one-time expense. It matters who you work with. The average loan officer who doesn't have a great manager backing them, or, just don't have this information, you may be told you don't qualify, but you do. You have to know who you're working with. Also, just as important, you got to have the right professional filing your taxes for you. You have to have the right that knows what to do. So for more information on how to get your taxes filed, make sure they're filed properly. Make sure you qualify for that first-time home, that next home, that investment property, whatever you're trying to do. You can dial 702-670-0518. That's 702-670-0518. Or if you're ready to apply, you can go to HaskinsTeamHomeLoans.com. That's HaskinsTeamHomeLoans.com, and someone will contact you within 24 hours to get you all the information that you need. So, as we're learning today, the way you file your taxes is very, very important. You don't know how many people I turn down on a monthly basis because the taxes weren't filed properly. That's why I've invited a great friend of the show, Erica Rutherford here. She is a tax professional. She specializes in filing taxes for real estate agents. If you're a real estate agent out there, you may want to contact her. If you have clients that are self-employed or own rental property, you may want to contact her. Erica, let them know how you can be contacted.
You can reach out on our website, which is reeftaxgroup.com, or you can call us at 702-744-7074.
Now, I know the importance of a great tax professional. I'm not a tax professional, but I know the importance of it, of having one. It can make or break the deal for you. So I want to let Erica, you expound a little bit on what she does and talk to us and let us know why she is the right person to go to.
I believe I care about my clients, just like I know you do as well, Tim. I'm going to go that extra mile to make sure my clients have all the deductions that they are qualified for. I tell people all the time, your tax person or CPA is only as good as the amount of research they're willing to do for you to get you and find what specifically applies to you. Tax returns are the same to some point, but pretty much everybody's a little bit different. So your situation may not be the same as someone else's. So as a tax professional, I really try to dig into the tax code and help to understand what is going to help your particular situation. Just like with home loans, I'm sure, if you got to dig and see what is actually going to help that person's particular situation. If a person is not willing to do the research, then they really are not working as hard as they can for you. Research is very important in taxes. I have a client who was telling me something that a friend said, and I said, well, where's that reference in the tax code? They couldn't tell me, so I said, guess what? Doesn't matter to me what they're saying. If I can't find it in the tax code, because people can read the tax code and walk away with different meanings once they've read it. But if we can't talk about what the law is, the tax code, then it really doesn't make any sense to me. But I really do believe that your tax professional is one of the most important people you can have on your team if you own a business, and you should not really be doing taxes yourself if that's the case.
Awesome. Again, you said a mouthful there. You said that your tax professional is only as good as the research that they're willing to do. That is so important. That means that you have to have the right tax professional on your team, especially if you are a business owner or you invest in real estate. You're a homeowner. You're looking to purchase a home. You got to have the right tax professional on your team. That's why I have Erica as a friend of the show. I wouldn't steer you wrong. If you need more information, contact 702-670-0518. That's 702-670-0518. And we'll get you in contact with Erica if you happen to be driving or can't write it down. We'll get you in contact with her. The Home Loan Coach and Friends is here every Sunday morning at 7 a.m. right here on 91.5 KUNV. So you can catch us here if you missed any contact information. We're here every week to help you out. I want to talk about what Erica just said. The tax professional is only as good as the research that they're willing to do. Well, guess what? That applies as the loan officer as well. I can imagine that the tax code is a whole lot of pages.
It is. It is a lot. And I've been doing taxes for almost 15 years. Our office has been open for a little over 9 years. We're coming up on our 10th year. And it is very, very important to understand the tax law and how it applies to each individual and business.
Right. So I don't know about you, but I don't think that you want to sit there and read the tax code. So you got to have a professional that has been working with it, like she said, for almost 15 years. So she knows, what sections to go to, how to look it up. And there's new tax codes and tax laws that come out every year. I'm sure you have to stay up on that as well, right?
Absolutely. And you got to know which questions to ask. And everybody doesn't understand which questions to ask. And the more questions you ask, the more information you get, the more you're able to assist the client and actually help them.
Right. So I always tell my clients, being a loan officer or a tax professional, we're kind of like attorneys. You know,
yeah, I agree.
When you talk to your attorney and your life is on the line, you want them to protect you. You got to be 100% honest with them. You got to tell them what's going on, because what good does it do for you to not tell the truth and then get yourself in a bind? Okay, so same thing with a loan officer. You got to tell me what's going on with your income, how much money you have. And a lot of people, why you need to know all this? Okay, well, you got to tell me, because I'm on your side. I'm on your side. And just as the tax codes, there's a lot of pages, the guidelines for Fannie Mae, Freddie Mac, FHA, USDA, VA, there's guidelines. And you cannot be a lazy professional. And what Erica just said is, your tax professional is only as good as the work that they're willing to put in. Code word for lazy. If they're just looking to collect a quick fee from you, they're not the person for you. If the lender is just looking for a commission check, they're not the lender for you. You want somebody that's going to put the work in, put the time in to put you in the best position that you can. That's why I have Erica here, because I trust in the work that she does. She goes above and beyond for her clients. And if you need more information on how to contact her to get your taxes looked at or get them filed, if you are a business owner, if you own rental property, if you're looking to to purchase a home, you need to contact her. We're coming up on the end of the year, and you want to go ahead and get those appointments set. And for more information on how to get that done, you can call 702-670-0518, 702-670-0518. That's to reach the home loan coach and his team at Legacy Home Loans. If you're ready to apply, go to HaskinsTeamHomeLoans.com. That's HaskinsTeamHomeLoans.com. I want to encourage you to make that appointment early. You want to talk to your loan officer if you're looking to buy a home. If you're looking to refinance, you want to talk to your loan officer. If you've been going to a lazy tax professional and you've been told by lenders previously, hey, you don't qualify. Hey, you don't make enough money. You say, hey, I do make money. You need to go to the right professional who's going to give you the proper deductions to limit your tax liability, but put you in a position to purchase. Erica, tell them how they can contact you.
You can reach us at reeftaxgroup.com and set up an appointment online, or you can call 702-744-7074.
Yeah, we're coming up on the end of the show, and I want to give a shout out to some business owners in the community. Erica and I were there about a week ago for coffee and conversations. The young lady's name is Kenya Young. She owns Marlin's Closet in the historic west side of town here in Las Vegas, and it's an event center. If you have a need to put on an event, I want to encourage you to reach out to her. Her number is 702-680-3191. Again, that's Kenya Young at Marlin's Closet, and her number is 702-680-3191. The event was put on. My wife and I hosted the coffee and conversations. If you have a business and you want to put on an event there and talk to the community about what you do, you can contact Sparkle at GoUrban.com. GoUrban.com, Sparkle. I want to encourage you to do that. It's a great way to get information out to the community. So our time is about done. Erica, you have anything you want to leave the people with?
I'd just like to say that if you are doing your taxes yourself and you're in business, just change that up. Get you a real tax professional to assist you with those business taxes.
Remember, you heard that on the Home Loan Coach and Friends. The Home Loan Coach and Friends. Tune in next week, Sunday morning at 7 a.m. right here at 91.5 KUNV. Thank you and have a blessed day.